Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is NFP Live. We actually had a delay to our NFP. Today, we were slated to get an NFP release in the latest jobs numbers here, the first real set of jobs numbers from January of 2026, and we're not going to get it today. We are going to get it next Wednesday, so I'm going to show you the schedule in a minute. We do have something interesting going on, though, and this is the 9 EMA trading strategy that we built out. We've got a lot of things that are happening here at Switch Markets, and how to trade in this trading strategy is one of them. Took a little bit of time, put some TLC, some 10 or 11 care into a nice strategy EA that's going to be available for you to download here relatively shortly. I believe it'll be online next week at some point. But we're launching the 9 EMA strategy, and this was a strategy that we covered in depth over on the How to Trade YouTube channel. I've put the link right there in the live chat there on YouTube. But the 9 EMA is something that we're interested in. I think that it's got some potential if you know how to trade it and trade it in the right fashion. Try not to fight strong trends. We have some confirmation tools in there that can help you trade this strategy with a little bit more efficacy than maybe you could otherwise. So a lot going on here. The idea is to bring as much value as possible. So this strategy is going to be our first installation down this road in 2026. Now, there's a lot more to come. We've got all sorts of different strategies we're going to be releasing, and it's a product of that How to Trade Switch Markets dynamic. We've decided to sort of merge and give as much trading education and support as we can to new traders and veteran traders alike. And a big faction of that, a big portion of that is strategy. It's one of the biggest questions I get. I sat down with some of the folks from Switch Markets, and they said, Shane, you've been at How to Trade for a long time. And I said, yep, years and years. What is the number one thing people are looking for? And I said, well, people are looking for psychology. People are looking for, ways that they can craft a life in the markets. But a big part of that is strategy. Having a strategy that they believe in and that they want to execute day in and day out. And I said, well, we had a lot of success, a lot of great feedback on a 9 EMA strategy video that we built on the How to Trade YouTube channel about a year and a half ago. And I said, that may be a great place to begin. So we decided to link up, join forces, and put the 9 EMA out. So be sure to register on that link, download it, check out the video. We're going to have all sorts of goodies coming your way. When you register, you're going to have an opportunity to get a PDF. And then we're coming with our EA code. That's going to be dropped a little bit later, where you can program this and maybe even automate it for yourself. I don't recommend that at first. I believe in getting to the bottom of a strategy and seeing if it's for you and understanding when to trade the strategy. Right now is a pretty good time to be trading the strategy. We've got a nice sell setup here that we're working on this gold market, but it's behind a few bucks here. But it's all in all a pretty good trade. We've got the carrot there, the purple carrot. Our RSI was in overbought territory. We took the sell. It looks like it's going to go against us, but remember, risk management per trade, anywhere between 1% to 3%. And I'm going to talk a little bit more about that later in the stream. We're also going to have some dedicated streams to where I just trade this strategy and we sort of keep a tally and see how much money we can make. But this is one of those things that if you know when to trade it and how to apply it, it could be a very, very strong strategy for you. And I know there's a lot of new folks watching today because of NFP, expecting NFP. I wanted to get this out there right away, but most of the folks that are in the How to Trade community or that are in our YouTube or fans of our YouTube channels that watch our live streams daily are very familiar with this strategy, and I think it's a good place to begin. We've also got others. This trade right here looks like it's going against us. We'll give us some time to simmer, though. We got a good stop-out point. We've also got some 920 EMA crossovers, one of my favorites. It's one I'm really pushing. I would love to get something real similar to what we've built here for the 9 EMA out to you as well. And also the opening range breakout. I think that's a great one. And to take these strategies and sort of just give you a place to begin. It's very important that you understand I'm not a signals provider. We're not signals providers here. My job is to give you analytics and support and maybe show you some of the trade ideas that I'm looking at. Now, being a signal provider means here's my strategy, trade it, and you'll make money. That's not what this is about. These strategies are jumping off points. They're a great place to begin if you're sort of stuck and you don't have an idea of where to get started in the markets. So I want to start off a little bit of talk about strategy because today we were expecting non-farm payrolls and we're not going to get it. I'm going to go ahead and show you the revised schedule and where we're going to be next week. We've got a lot of data next week. It's going to be a big-time week on the markets. It should be a lot of fun. So let me see Ahmed. Good to see Ahmed. Welcome. Tina Jing. Hello. Tammy. Good to see you, Tammy. Welcome. Andrea Garwal. Good to see you, Andrea. Welcome. Steve Francis. Tuku. A lot of familiar faces. Good to see everybody back in the trading room. As far as what's been going on for the last 16 hours, 18 hours, something like that, 20 hours, Bitcoin, gold, silver. It's been an absolute, just an absolute crazy ride. We put out a weekly analytics video that drops every Tuesday during that UK session, right before that UK session, and I outlined some macro levels for you. And we did it for Bitcoin, Ethereum, gold, and silver. We also did it for the Great Britain pound US dollar, and it didn't start out as being the best week in the world. Today, it's gotten pretty good in about the last 18 hours. We had a couple of my long-term levels come into play, and boy, they were strong. I mean, they really were strong. So let's go ahead and get started with Bitcoin. Good to see a little bit late arriving crowd, but that's all right. Daniel Tarimo, good to see you. Daniel, welcome. Yes, sir. Always a pleasure. Yes, sir. I guess before we get started, let's go ahead and cover the news of the day. The news of the day that's not the news of the day, and this right here is the U.S. Bureau of Labor Statistics. We were looking for a non-farm payrolls report, the first jobs data of January 2026. No, you don't get it today. You got to wait. Right here, revised news release dates following the lapse in appropriations. You can see right here the employment situation. This is the one that we're looking at, January 2026. It was scheduled for today, February 6, 2026, and now it's been delayed to February 11th on a Wednesday. So we're going to have a non-farm payrolls on a Wednesday. Hey, why not? There's no rules anymore. I don't really know why it was revised. I don't know why the release was later. This happened after we put out our weekly newsletter. So I had the newsletter written up, and NFP was a big part of it, and we talked about what to expect and what the markets were looking at, and it just did not quite develop for us. It's one of those things where I look at this and I say, wow, the fallout from the government shutdown is still very real. So remember, we just went through another government shutdown. They signed a stopgap funding bill that should keep us funded for the next couple of weeks. But this is going to be a theme throughout 2026. I'm looking at it probably another extended government shutdown this spring at some point. It could look a lot like what we saw last fall. There's a tremendous amount of pressure in Washington, D.C. because it is an election year, and that's what this is all about. That's what the posturing from each side's about. It's about who's going to hold on to Congress, who's going to take power in Congress, maybe potential impeachments against Trump if in fact this House of Representatives and Senate turns over, and there's a very good chance of that happening. So what we're looking at for today is nothing. It's a true no donation Friday. However, there's such incredible volatility on the market. Stock futures have rebounded ahead of the open. We're looking at a huge swing in gold and silver. At one point yesterday, silver was down about 10%. right after the open, and now it's up 7.5%. The swings are epic. Bitcoin still sort of in bearish territory, but we got a tremendous bounce off a key support zone that we're going to cover. So right there, Wednesday, February 11th, be there, be square, unless we do get it delayed again, and then I'll be here whenever we decide to drop the numbers. The other thing that I want to cover here is CPI. Friday, February 13th, next Friday, Friday the 13th, is going to be CPI. So what we're going to do next week is we're going to hit the jobs numbers on Wednesday and the CPI number on Friday, and it's going to be absolutely a huge 72 hours to be on the markets. And I don't really know what to make of it because so many of these positions now are unprecedented. We don't know what to do with an economic calendar, with an NFP on a Wednesday and then CPI following it on Friday. It's really difficult for us to sink our teeth into that. And when I look at something like this, an economic calendar that's this disjointed, I mean, it really makes me wonder, what exactly is going on? What can we expect throughout Q1, Q2, Q3, and Q4? I don't know. I just don't know. We've got a lot of news this spring. We're going to be putting a new Fed chair in office. That's going to be crazy. We haven't seen that in 10 years. So the J. Powell era is winding down at the Fed. What's policy going to look like? What do all these numbers mean anymore? Really hard. It's really a difficult environment. And that's why we fall back on our technicals. We trade with really an aggressive bent, especially when it comes to risk management. We don't want to get caught in a situation where we don't know what's happening and we're going to lose a lot of money. So we got to be very careful with that. The economic calendar is brutally important that you know when these releases are. As of right now, Wednesday NFP, Friday CPI. I'll be here for both. Ask any questions that you'd like. It's a good time for it. Let me see. How many pairs does NFP affect? Daniel. Marcine. Good to see you, Marcine. Welcome. Let me see. How many pairs does NFP affect? All of them. All of them. Lita. Good to see you, Lita. Welcome. It affects all of them, especially the U.S. majors. Any U.S. dollar-based pair, you're going to see big-time volatility in and around NFP. Now, the cross pairs, even those that don't necessarily involve the U.S. dollar, still indirectly are sort of tied to commodity prices, which are denominated in U.S. dollars. Or maybe folks are looking to diversify away from the U.S. dollar, so they look at maybe an Aussie CAD or a Great Britain pound euro, something like that, and they get in there and they say, okay, I want insulation from USD during NFP, so I'm going to go ahead and trade this cross pair. So in a word, Daniel, I think it affects everything. I would be ready. If I was trading baseball cards, I probably would still be aware that NFP is on the board. All right, guys, let's get to the party at hand, and that's Bitcoin. Bitcoin, absolutely fantastic stuff. This was our yearly chart that we broke down for you in our newsletter, in our hot picks, our switch on hot picks. Outlined the yearly support levels. Didn't see too many people looking at this chart. Was very surprised. Then I said, well, anytime the market gets crazy, and Bitcoin has been insane for the past several months, and we go, okay, what do we need to do to trade this thing successfully? And the first thing to do is, okay, if you're trading or you're scalping Bitcoin on tight time frames, then go for it. Get in there with your technicals, trade, make the plays, do what you have to do. However, if you're trading from sort of more of a macro perspective, where you're looking for maybe a bottom in the current move, then you have to step back from 10,000 feet. It is very, very rare on one of these live streams that I pull a yearly chart. Very, 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 very rare. I had to pull a yearly chart on Bitcoin to figure out just what the heck's going on. Yearly support level was right there at 50%, 70,876. Told you I'm not a big fan of 50% levels. We also talked about a potential breakout beneath last year's low. That developed beautifully. And then we talked about potentially the end to the madness. And we were looking at 57.8. Yesterday afternoon, after the Friday futures U.S. Open, we saw incredible volatility in Bitcoin. I was sitting here watching it going, wow, this looks like a morning time market dynamic with so much volume in there and so much participation. And our level right there, 57.8, we went down to 59.9, 30, 60,000. I mean, we were right there at 57.8, then we bounced up significantly. That's a big time level. That's one of those numbers that we look at and go, wow, that is really something. Huge bounce. So as of right now, as we roll forward in time, you have to be looking at 60,000 closely for Bitcoin as being significant downside support, probably for the intermediate term. Now, what I want to stress here is this area right in here, this 57 area, we hit 59, so we're pretty much in the vicinity there within 2,000, and then we've bounced Since then, we've bounced about 8,000, and that's happened in the past, 12 hours or so. So when we're looking at a big rebound off of a key level like this, it's important to write that level down, understand that it is a very, very big deal. It is a very big deal. And if, in fact, we do take out that 57 level or 60, we're going way, way, way down. And the reason why I say that is because even though you're very bullish long-term Bitcoin, I mean, the prices have gone from damn near zero to 125,000 in under 10 years or so, something like that. Or maybe from a few $100s or 1,000, 126-fold to your maximum gains. To see this come off like this shouldn't really be a surprise. There's always a pullback in a market that's that bullish. But wow, if 57's taken out, if 60's taken out, you're going to see a sell-off down here, 78% more than likely, 39,000, 40,000. A lot of people don't believe it's possible. I believe it's 100% possible. It's 100% possible, that's for sure. All right, we do need to understand right now. I know it's the time. A lot of you are tuning in looking for NFP. NFP is not live today. It's going to be next Wednesday. That number was delayed by the United States federal government. Don't you love the government? They do exactly what they want whenever they want. So next Wednesday, NFP Wednesday, CPI Friday. We'll have them both live for you. Let me see. What do you think about the USD in the long term? Is it doomed? Kareem? Yeah, it's doomed. U.S. dollar is going to sell off more than likely throughout the year. I'll talk a little bit about why here in a second, but it's a good question. We've got to get out to silver, though. Silver's going absolutely crazy right now. That's for sure. Let's see. Daniel, and it is actually safe entering the market when NFP is out, or should we wait it out, and for how long? Yeah, so my basic rule of thumb, Daniel, when I'm trading something like an NFP, is I'm flat 5 minutes before the number, and I'm not looking to get involved probably for 5 minutes after the number. I don't want to get caught in a big rush of volume either way. I'm not interested in that. So we have to know exactly what we're doing. Always keep your powder dry. You don't want to lose your entire account on an NFP type of a day. 5 minutes, I'm flat 5 minutes before, I'm trading 5 minutes after, and that really is all you have to do. You just need to let that initial onslaught of participation die down a little bit and realize that the markets are going to price in NFP for the rest of the U.S. session. Good question. Great question. Bobby Bob, hi, Coach. Hey, Bobby, how are you? No donation Friday. Yeah, we're doing no donation Friday. I'm going to talk about that psychology a little bit and what it means to generate momentum in the market and hold it until Monday. A lot of you that have been in these streams for a while know what that is. Some of the folks that are brand new to the markets don't really know what that is. Okay, let's get back out to our 9 EMA trade. It looks like we are going to get stopped out. You'll notice that my stop loss was right above this swing high, and we sort of rotated back up here. We're almost been stopped out, but it looks like our stop out's in a pretty good location. If we rotate lower from here, we're still live in the trade, but if we do get stopped out, that's okay. We're not going to worry too much about it. We're not going to worry too much about it at all. We think that we've got a chance here maybe to get a retracement, but if not, that's fine. 1 to 3% on any trade, that's absolutely imperative. You don't go over 3%, especially on a 9 EMA trade on a 1-minute chart. That's about as high risk as it gets. Your profitability is going to be based upon taking a lot of trades, especially on a 1 minute. I mean, you could sit here, if you were trading the 9 EMA 1-minute chart and you were doing it for the next maybe 3 hours and you were looking at 3 or 4 markets, I mean, you could make 15 trades. You could make more than that. So it's important to understand this is a marathon. It's not a sprint, especially with a strategy like this. You don't bet it all on one trade, and you make sure that your stop losses are in good locations, 1 to 3%. And you can see this trade sort of hanging in there. We're down a little bit, but if we do get a big sweep lower, we'll win. And if it goes up against us, we'll lose. That's just the way it is, and then it's on to the next one. That's systems trading. That's strategy trading in a nutshell. Sometimes it's great. Sometimes it isn't. Just depends on what kind of day you get into. Let me see. Steve Francis, is the VIX more relevant to indices rather than Forex? 100%, Steve. We can go ahead and look at the VIX, and then I want to get into the metals because that's really where the action is. If you could see the VIX, here's the volatility index. This is a 12-month volatility index. And what the VIX is, it's a good question, Steve. What the VIX is, the volatility index from the CBOE, it's a futures contract that's priced, and it's based on the front month options premiums for the S&P 500. So what does that mean? An options premium is the price that you pay all right, to have the rights to either buy or sell a commodity or a stock or really whatever the options contract is on at some future point in time with relative to a given strike price. So you can buy puts and calls. That gives you the right to either buy or sell a group, a quantity of something based on a stock premium. So let's say you're looking at the VIX and you say, okay, what does it mean? Well, they're talking about S&P 500 deferred month options contracts, and what the VIX measures is the volatility in those premiums. So as those premiums prices are going crazy, that suggests volatility. That means that the market's uncertain of what's going to happen in the immediate future or the deferred future by just a month or two. And you're looking at that and you're going, okay, so the more action that's in those premiums means there's more uncertainty among traders. They don't know what the S&P 500 is going to be trading at a given point in time in the future. So what that means is that elevates the VIX. So quick and dirty, the VIX is the Wall Street's fear gauge. As it goes high, it means that there's definitely downward pressure on stocks. As it goes down, there's definitely more of an ease, a relative calm and ease in the market. So I did some work on the VIX. I did a video on the VIX, I think, a while back. And essentially what the premise of the video was understanding how to trade the VIX. So this is a monthly chart, volatility index, VIX. Get in your way back machine. Let's take a look at what's happened to the VIX over time. Let's go back to October of, let's see, right there, October 2008, sort of the height of the financial bubble. You can see that VIX spiked up to 89.53. That was a full-blown financial crisis. And you can see some of these peaks. Once again, crisis period back in 2011. Then you got a big spike right there in 2015. A lot of that had to do with some of the central banks jumping out of their pegs globally. Then you had February 2018. That was sort of some market angst that popped up during that first Trump administration. And then right here, December of 18. This was a surprise rate hike from the United States Federal Reserve. Sent markets tumbling on Christmas Eve. I remember that one. That was a big one. And then this one right here, March 2020. Everybody here remembers COVID. And that right there was the onset of the COVID-19 pandemic. Shook the markets to their core, roiled everything. This right here, this spike right here, August 24. What did you have right there? Russia, Ukraine. So no, wait, that wasn't Russia, Ukraine. That was the carry trade. The Japanese carry trade unwinding. That was just tremendous amount of action from international bankers. And this right in here, I do believe, right in there was going to be your Russia, Ukraine, right in this zone right here. And then right there is what? Carry trade unwinding. What's April of 2025's elevated reading? It was the tariff fears. So your long-term average, I think a good rule of thumb for a long-term average is about 21. So right now, where are we? We're right at that long-term average. We were a bit elevated yesterday. We saw the downward trajectory of the stock market. You had really a bearish close. Right now, big tech is getting whacked pretty good. So if you were looking at your news feed, Amazon, big tech sees over $1 trillion wiped from stocks as fears of AI bubble ignites sell-off. I don't know if this is going to hold. I'm looking at the futures right now before our U.S. Open in about another hour, and you're up about about 1.5% there for U.S. tech. So to me, I'm looking at U.S. tech thinking, this is a pretty good rebound. I don't know that there's any bubble that's popping right now. AI fears pummel software stocks. Is it illogical panic or an SAS collapse? It's an illogical panic. There's no reason for these markets to be as tumultuous as they are right now. However, this VIX reading was elevated yesterday. Now it's off about, 7%, and we won't really have a good idea of what the VIX is going to tell us until after that U.S. Open. So you're going to be watching the VIX today. Anything over 21, I'd say, is elevated. You're looking for big spikes in the volatility index, though. So if you get a runner, let's say up around 28, 29, 30, then we're starting to talk about, okay, what the heck's going on here? So to answer your question, Steve, is the VIX more relevant to indices rather than Forex? Yes. The VIX addresses the market angst and the bearish participation in your equities markets, U.S. equities, specifically the S&P 500. Something to think about. Let me see, Lebo, NFP, let's go. There is no NFP today, Lebo. There's no NFP. It's delayed next Wednesday. Save the date. We'll be doing this. Is it good news? Joe Gill. No, we've got one last time. We've got a delayed NFP. I know everybody's tuning in and they want to trade NFP. Delayed NFP. NFP is next Wednesday. Wednesday. Next Friday at this time is going to be CPI. So I'm going to be live early pretty much every day next week, 2 days at least. So this is going to be our time slot, at least for a while. Let me see. Kareem, what's more likely to happen in the future? Gold to 50,000 or Bitcoin to 1 million? I'd say probably the discovery of extraterrestrial life. Gold to 50,000? So you're buying gold looking for a 10x? Well, it's possible, I guess. I have no idea, Kareem. You stumped me. Bitcoin to 1 million or gold to 50,000? I don't think the banks will let gold go to 50,000. Bitcoin, I don't really think anybody cares what it's worth. Just Bitcoin holders. I don't care what Bitcoin's worth. What does Bitcoin at 1 million mean? No idea. So you're looking at a 10x trades across the board. If I was going to take a 10x flyer, probably be Bitcoin if I had to pick. I don't think they'll let gold go that high. Ahmed, Nikkei's my favorite. Did the Fibonacci trade and been a good one? Really? Let's look at the Nikkei right now. Gold definitely going to make even more new highs before the year gives out. I tend to agree with you there, Daniel. All right, let's go ahead and take a look at gold. Did we get stopped out on our 9 EMA trade? I believe we did. Okay, right there, 9 EMA, we got stopped out. Remember, your first loss is always your best one. First loss is always your best one. Let's take a look at some of these other markets. Here's silver right here on the 1 minute chart. You see we got a pretty good move right there on silver and then rotated back. And now we're sort of waiting for something to set up. As far as are we going to get a trade here? No, we're not. We're trading right between that RSI 70 and 30. Remember, check out the video. I promoted that at the beginning. I dropped the link. I'm in the live chat there on YouTube. Check out the strategy video. Tell you exactly how to trade it. Also, you get your whole package with your PDFs. Everything will tell you how to trade this strategy as well. So right there, not really seeing a whole lot on gold. Let's look at the Euro USD 5 minute chart. Now, this is interesting to me. Now, this is something that I could sink my teeth into, realistically. Let's go ahead and blow this up. What do you got? All right, we're elevated right there. Relative Strength Index, RSI is up at about 72, and it was at 72 right here on these price bars. We have about a 7-bar lag. That means that if we get a bar close beneath that 9 EMA within the next 7 bars, boom, 1, 2, 3, 4. So if we get a close down there, you got a pretty good chance to take that trade. We'll get a trading signal. Now, the 5 minute chart, I like the 5 minute chart, especially for the Forex. This time of day, it's a lot better than a 1 minute. The 1 minute's very choppy. I just showed you how easy you could get chopped up trying to find a trend in gold. This right here, the longer the time frame, typically the less noise. So if you were looking to trade seriously right now on this strategy, Euro USD, heart of the London US overlap, tons of volume in there, lots of participation, I would be looking at like a 5 minute chart, maybe a 15-minute chart, maybe a 30-minute chart. 15-minute chart, you can see we're sort of getting towards the top of this market here. 30-minute chart, we're sort of approaching that 70 level. Could be a really nice swing trade, maybe even for an early Monday. But right here, 5 minute chart, this is a pretty good one. I think we're going to get a chance to trade this one early today. The 1 minute chart, do you have anything on the 1 minute? Not really. Not really, not right now. You can see that this crossover right in here, this sort of that dirty area, very difficult. Right there sort of was your sell. Is that high risk? 1 minute chart, very high risk. Very high risk, especially for a Forex pair, just because it's so tight. I mean, we could send them right here. We could send them short. Where's my one-click trader? We could go short right now, but you just have to really realize where your stop loss is going. Your stop loss is always going to be right above that swing high that corresponds with that RSI. Essentially, that's the value of the trading strategy. So if you wanted to put something on like this, 1.5 to 1, 1 to 2, 1 to 3, you certainly could. Your probability for success is very small. But take a look at what you have here. You know, very, very, very tight trading. I mean, your stop loss right there at about 1807-ish. Your profit target down there at about 1801. This is a true scalp. This is a true scalp. Only looking for a few pips profit. Is it a good trade? It's not a bad one. I mean, it's not a bad one. We sort of went in on a retracement level. We'll have probably another video to show you how to do that. But the market's starting to go our way a little bit. Maybe we get paid off. Maybe we don't. Personally, I like this 5 minute trade. We're going to be watching that probably for the next few price bars as we move forward in time. Okay, everybody, let's go ahead and get to some of the markets that everybody tuned in for. Gold is definitely a big one. We talked about gold a lot over the past year, 2 years. Everybody's trading gold. There's no two ways about it. Gold is one of the biggest markets in the world right now. All right, we got a couple questions here. I'll cover this before we do gold. Let me see. On the 9 EMA, let me see, Steve Francis. Yeah, on the 9 EMA, does the 7-bar strategy only apply to the 1-minute chart or on all time frames? It's coded for all time frames, Steve. So if you're looking at, say, a 30-minute chart, if you get that cross under within 7 bars, what that's going to do is that's going to give you a viable stop-out point, And you're going to have an opportunity there to really build your trade according to your applied risk. And that's what I really attempted to do with this strategy, was to give everybody an understanding of where they had to leave the market. Now, the profit target's sort of up to you. And I'm a 1-to-1 trader. I think you can trade profitably for a long time doing 1-to-1 ratios. I really do. I've done it. But if you're looking for 1-to-2, 1-to-3, 1-to-4, traditionally what people in the market would teach on a strategy like that, you can do it. But the most important part of that is knowing where your stop loss needs to be. And what we've done with the RSI and that 7-bar lag, it helps you align your stop loss precisely. And that's absolutely key. Let me see. Ahmed, hi, Shane. Are you available on how to trade today for questions? Yeah, just go ahead and send me a private message. I can see I have a whole email inbox full. It's very early in the morning where I'm at. The money never sleeps, but I will get to those today. That's for sure. Let me see. Kareem, what are your thoughts about breakout trading? Yeah, I've got some thoughts on breakout. We've got some great strategies, orb strategies, opening range breakouts. Very good. I like them. They can really work. Very different than what we're talking about for the 9 EMA, but breakout strategies can work. Let me see. Thoughts on the dollar Swissy? It's very low. Yeah, I'll go ahead and pull the dollar Swissy chart here in a minute. Okay. Well, let's go ahead and have a look at this gold market. I want to look at gold and silver, and then we also had a couple trade ideas and things that I can get you up to speed on. Not much on the news cycle. Today is going to be one of those days, I think, where protecting your capital is going to be a good idea. All right, here's gold. Gold, the monthly chart. Remember, anytime that you're trading something that's moving with the volatility that gold and silver are, you got to step back and take a look at your big-time levels. 38% on this monthly. There was your spike low back in November of 2024, really the beginning of this aggressive uptrend, the compression last summer, the break, last month's high in January 2026, all the way up to about 5,500. Well, 55.95, so right around 56. 38% was a beautiful thing. Early February, retracement to 38%, right around 44, 44.25. What's your monthly low? 44.02. That's a pretty good trade. That was about we've called it within $20, and that's been a $500 rally. That pullback right there to that 38% was absolutely perfect. It really was. It doesn't get much better than that. So the uptrend in gold, very much intact. So what's the problem? Is there a problem with gold? No, there's no problem. What you've got there is a key level at 5,000. I would be watching 5,000 very, very closely. Would not shock me if we test 5,000 today. Be careful. A lot of volatility, a lot of participation in this market. But 5,000, you probably could scalp from there to the short later on today if the market does go that high. So I'm watching 5,000 closely. I think that could be definitely one of our picks to click, maybe for later in the day, midday scalp, something in that nature. Be watching that. I'm in the gold market. Here's silver. Silver, this is one of those where people lean on me. I got the question yesterday. I said, Shane, what's your favorite? I mean, if you had to pick one strategy and one trade setup, what would it be? And I sat there for a minute and I said, Fibonacci convergence with key numbers, big round numbers. I think I tweeted yesterday, or I put it out on X. Old man Fibonacci is smiling somewhere in whatever life. Gold was one thing. Silver, this was a perfect hit. This happened last night. Silver monthly chart. Spike low right there, April of 2025. What happened in April 2025? Tariff panic. Right after Trump got in, everybody was worried that the markets were going to crash because of the tariffs. What happened? Nothing. You got a big rally, pull back there in silver, and then pretty much the generational run. That low was $28. It wasn't even a year ago, and we hit euphoric highs up around 121. And then there's your big pullback. So right here's your big pullback. You go right down to $64. I felt like that was an incredible level, an incredible level. I put it out on X. I put it out in real time, and I said if you hit that 64 area, you've got to be pretty excited about the prospects of this thing rallying. And the low was 64.06. Doesn't get any better than that. There's your bounce. Your bounce is up to $75. At the time, silver was in the absolute tank. Take a look at the 30-minute chart. Look at it. Volumes. These are tick volumes because this is a spot market, but look at that. The low, 64.06. I mean, there's nothing really else to say at this point. You hit that briefly, boom. The bidder stepped in and defended it. So the uptrend in silver still very much alive. Was it tough down there at 65? Yeah. If you had bought in at $110 or $115 or put your 401k into silver when it was up around 100, 120, this was not easy to watch 50% of your net worth pretty much evaporate in a week. I don't know many traders that can take that kind of hit and still smile, but there are some out there that just invest and say, I'm in this for the next 20 years. Okay, great. These traders weren't. These were short-term traders that stepped up and defended that level with conviction. The uptrend in silver is still very much alive. However, I don't believe we're done going down. I've seen too much selling in this market to believe that we're done yet. I don't think we're done yet. What we're seeing is every day people are getting flushed. People are getting knocked out. Retail traders are getting squeezed. There's been a lot of short covering. There was a lot of shorts that were run out of the market, and that was one of the reasons for the big bull run. There was also an incredible reversal up there when the momentum algos got involved last Friday. There was announcements from the administration. J.D. Vance gave a speech saying, we're going to secure a silver reserve, a precious metal reserve. Not necessarily a precious metal, but a rare earth mineral reserve. And they were getting all these people to sign on to it and trying to put in a price floor for silver, and that roiled things. So when we're looking at silver, if you love silver, I heard analysts yesterday saying 300 by the end of the year. I mean, never say never. Never say never, but, I mean, let's be brutally honest. 300? Maybe, maybe not. Could silver sell off and stagnate around 50? You bet. It could do that for a long period of time. We just don't know. And anytime you see a market that is completely disjointed, where nobody knows what the asset's worth, you see consolidation around key areas. Listen, this isn't an accident. Forget the Fibonacci's, forget the Bollingers, forget the moving averages. No one cares about any of that. What is happening to this market? Incredible sell-offs, incredible volatility, and now you're rotating around what? $75. Okay, sellers here, buyers here, 75 is where they're duking it out right now. Think of the markets like that. Think of it like, okay, sellers are here, buyers are here, and they're just slamming heads right now at 75 to see who's going to relent. Maybe nobody relents. Maybe we trade 75 for the next 6 months. Maybe we sell off to 50. Maybe we test 50. Maybe we go right back up to 100. I don't know. Nobody knows. Now, the silver guys, the brokers that I was listening to yesterday, the big-time silver brokers here in the United States, they were all basically calling everybody a fool for selling their silver right now. Do I believe that? No. They don't want everybody to pull the rug out from their operation. So they want people like me and you to keep our silver holdings and wait for this thing to go back up. Now, if you're an investor, you can do that. You just wait. You play the long game. You say, okay, I'm not worried about it. We're going to play the long game with silver. But if you're a trader, can you afford to still hold this thing? Now, if you're long from down here, and that level was there, and we called it out in real time over on X, Shane V_trader. If you got that one, that's huge. Then yeah, you probably would be thinking of holding this. But if you're long from up in here, oh man, it is not a pretty picture. It is not a pretty picture. I think we test 65 again. Macro, where do I think silver's going? I'm really respecting the short side of this market right now. There's just been so much selling. Once the selling's over, I have no doubt that we spring right back up to 100. But the selling could be here for quite some time. So if you were a trader and you bought silver and you got the tremendous run up to 100, I'm not sure there's any reason to buy in again just yet. I think it's time to wait. I really do. I would be on the sidelines waiting here, and I am on the sidelines waiting. A couple of plays that we're going to talk about that are going to be highly speculative. I'm not in yet, but you see the potential of a market that could come our way, and it's an altcoin. It's pretty good. But we've got some trade updates. I'm going to go ahead and outline these here in just a second. Let's see, what do we got right here? Let me see. Are we live trading market open today? Nah, I'm going to be signing off here in a few minutes. I've got a couple meetings I have to do, and then I got to trade my crude oil. I'm looking at a couple trades on a no donation Friday. We got to go over our psychology as well. Let me see. T Marina, good to see you. T, welcome. Speaking of breakout, when can you do a video on trading the opening range? Oh, I've done several videos on that. Let's see. We've got opening range breakout. That's over on the How to Trade YouTube channel. Opening range breakout, ORB, the orb strategy. And then we've got the orb for the Forex as well. So I've got 2 videos over there, and then we've actually got 3 videos, how to improve your entries on the orb. So things like that are all available over at How to Trade. Check it out. Not at the website, but actually on the How to Trade YouTube channel. Let me see. Are we trading the live trading in the open today? I've been begging the back office to trade real money. I think we're going to be doing it next week. I really do. Let me see. Funny Math. What's up, big dog? My favorite trader on YouTube. Good to see you, Funny. Welcome. I'm glad you came. Glad you came back. It's always good to hear. You get a lot of criticism in this industry, in this business, but it's always good to hear somebody's enjoying the content. Let me see. Marcine, Shane, would you use the Fibbo for scalping 1 to 5 minute charts? Absolutely. Yeah, we've done that. I was actually planning on trading Fibonacci's today after the NFP release. But yeah, what you're looking for is runners, what I call runners. And if you get into a market that's moving, so like let's say gold. Is gold moving? Should be. Okay, so here would be a 5 minute chart for like gold. You can see right here, you sort of got that big break, pull back, and now you got compression and then another break. Right now would be sort of a premium time to be trading Fibonacci, right? So you had 38%. I don't know how this unfolded. It looks like you got a little bit of love, but not a whole lot. So right here, you could be sitting at a 5 minute chart. I don't particularly love this. I love the breakouts, trading Fibonacci's when price is outside of my upper Bollinger Band on the bid side. That's fantastic. But right here could be a potential trade. It's just higher risk. So if you're looking at a 1 minute and a 5 minute chart and you're going to trade Fibbies, you've got to be aggressive with your stop loss. And that means that if it goes against you, you have to get out because these short time frames can be extremely challenging. Extremely challenging. If you're wrong, you got to get out and go on to the next trade. You can't get married to a position, especially on a 1 minute or 5 minute chart. So to answer your question, Marcine, yeah, you can do it, but it can be a real challenge. It can be a real challenge. Do I do it anymore? Not so much. I really like my macro levels. I mean, I don't. All right, let's go buy. What are we going to buy here? $1 a pip. Let's go ahead and knock that down, make it a realistic trade. All right, let's go ahead and I don't want that. I want that right there. So to execute this trade, to answer your question, Marcine, what you'd want to do is get right above your key Fibonacci level. I like 38 and 62. I'll also trade 78%. So something like that. I don't know. Did we get there? Nah, I don't want that. Okay, so that's essentially what you're looking at. That would be your bid. You'd be looking to bid 62%. You see 50 worked. I don't trade 50s, but 62% right there would be your bid, and you'd be looking for a real tight scalp. And the biggest problem that you run into with trading short time frames with Fibbies is a lot of times you get compression, and then you'll get a big sweep or a break, and you're just in trouble. And it's just not a very good feeling when you get on the wrong side of those. That's for sure. Let me see. Kareem, I don't trust silver. I don't know who's still trusting silver out of that much. Those longs are toast. Absolutely right. Absolutely right. Let me see. Crudy. Wait, I thought NFP was not getting delivered anymore. What happened? Yeah, there wasn't. It was delayed. It's delayed till next Wednesday. Check our economic calendar out. You can see right there, nothing. Canadian employment change typically doesn't do much to anything. But yeah, there's just nothing out. Michigan consumer sentiment, if you wanted to sort of look for a number, maybe a little bit later today in about another hour, but I'm not really interested in it. There's nothing out today. Russia unemployment rate, I mean, no. So we're coming out Wednesday. Let's get back out to price action, though. This sort of piqued my interest now. If we get a little pullback there, maybe we get a trade, maybe we don't. Let me see. Team Marina. Oh, I'll check them out and watch. Absolutely, T. Check those out. They're over on the How to Trade YouTube channel. Tina Jing. Silver's too hot to handle. Gold is much better. Yeah, silver's sort of a guts trade. I mean, that's a big one. This doesn't look like it's going to come our way. Let me see. Kareem, do you trade natural gas? I have in the past. Natural gas is a lot like silver. You know, Tina just said silver's too hot to handle. Natural gas has buried a lot of traders. Right here's natty gas. A good look at the overnight action, going back to sort of that London Open, right in this vicinity. Spike low. There's a big sweep, and then you're getting the build. But you can see that the business has definitely picked up. You've got the volume in play. You can make trades on natty gas. You just got to be really smart about what you do. I got away from natural gas just because some of the sweeps, what I call sweeps, are unbelievable. And this is a fantastic example. This daily nat gas CFD, you can see back on mid-January, you just got an incredible gap up from a close right there on a Friday to 31.72 all the way up to an open of 35. And then you get the compression, and then what happens here? You get another big gap down. Close there was 5.6, 5.8, and your open there was 4.7. What that tells me is that there's not necessarily the most efficient market out there. Now, we do have a long-term level right in this zone, right in that zone, which is about 4.775. That area is a long-term Fibonacci, but something like that. I could be looking for convergence there, so 50% right around 480. That zone we could probably target for a short sell. It just has to be a very tight. I really advise against holding positions in natural gas. That can be definitely a problem. Let me see. Hello, sir. Can you reply to my comment? Praj. Good to see you, Praj. I might have missed it. Let me look. Oh, we got a lot of folks in the live chat. Praj, I will reply to your comment. Just list it again there. Or if somebody else sees this question, put it up there, and I'll be more than happy to answer. Let me see. Funny math. Are you longing the Patriots or Seahawks in the Super Bowl? Well, that's a good question. We talk Super Bowl. It's not a coincidence that the two top teams play a lot of defense. So there's an old adage, defense wins championships. So the question is who has the best defense? Does the Patriots or does the Seahawks? Here's the thing to remember. A lot of people are leaning on the Seahawks. Seahawks played their games at home in the playoffs. That always helps the defense. Home teams, the defense is always amped up. Now, probably the best defense around was Denver. And they just their quarterback got hurt, and then you had the snowstorm come in, and they got knocked out against the Patriots. Patriots defended Denver pretty well, but there wasn't a whole lot to worry about when that snowstorm came in. So I think the Patriots, that's the defense I would lean on. I think they can really control Darnold and the Seahawks. If I was going to do it, and I don't think I'm going to bet on it, but if I was going to do it, I would probably take the Patriots or maybe the under. A lot of people are on the under, though. That typically doesn't work in big games. You're going to see points. The NFL loves points. They're not going to have another 3-0 Super Bowl. But I would be very, very careful backing the Seahawks in this one. Could happen, though. I mean, both defenses are good. Comes down to quarterback play. Do you want to back the rookie quarterback for the Patriots? Do the Seahawks get him into mistakes? Drake May is pretty good, man. I don't know. I think Darnold has more to prove than Drake May does. So I hope that answers your question, Funny. I think I would be long the Patriots in this one if I was doing it. Let me see. Praj, sir, where are you from? I'm a first-time visitor to your channel and have been subscribed. Yeah, ChatGPT recommended as a top live channel for live trading. Really? It's good to hear. My name is Fernandez from India. Good to hear. Good to hear from you. Yeah, we do a lot of live trading, not so much today, but we will be doing it all next week. So be sure to come back into our daily live streams. Let me see. Oh, wow. Drake May, Super Bowl champ incoming. I think he's got a really good chance, Funny. He was pretty good in that snowstorm. Took care of the football against Denver. That goes a long way for me. All right, we've got some trade updates here. Trade update, Great Britain pound USD plummets following the Bank of England decision. This trade's interesting. We put this one on yesterday after the BOE. Sort of a tricky trade, you know. I mean, there's a lot of ways you could have executed. You could have stopped yourself out right beneath that swing low. This right here is why I don't like doing that. I really don't like doing that. You can see that this area, this swing low, and then you sold off, and now you're on the rally. I really feel like it was a pretty good trade. Our bid was somewhere right around 135.44-ish, and you'll see this spike low was only down there at 135.08. This was an area where your stop loss, your best stop loss, probably should have been beneath 135 and given that area an opportunity to catch some bids. If you did that, you won some money here. You made about, 50 pips on the trade. If you didn't do that and you cut it off, I mean, I understand why. But that was one of those where you saw this area get hit right here, and then what did you get? You got one of my favorites. You got a hammer formation set up. Love a hammer. Love hammers. That was just an absolutely great reversal move right off of that 135 zone. As far as our entry point, was it great? It wasn't great, but it was corresponding with a longer-term Fibonacci level. And you can see right here, what did you get? What did you get? Got a hammer. 4-hour hammer around your key level. My compliments to the chef. That's good stuff right there. That's good stuff right there. So I really like that Great Britain pound USD trade. What did we have for today? US Non-Farm Payrolls did not happen to close week 5, so we're just sort of going through a few things. One thing I want to talk is a little bit of psychology before we ditch today. I've been on for about an hour. That's enough for today. No donation Friday. A strategy that I've used, I'm going to employ it today. I've had a pretty good week, not a bad week. Trading crude oil futures, Euro FX futures. Made a little bit of money. I'm pretty happy with it. A winning week, you bank at least 50% of your profits. So the number one thing I'm doing today is I'm putting half of that money in my pocket, and I'm coming back Monday ready for more. If you're having a losing week, if it's small, you trade as usual. If it's a big losing week, you wait till Monday to trade because things are not going well and you're losing money. You can't trade if you're losing money. You need money to trade. If you're losing your money, you cannot trade. Right there. And also, if you're neutral, if you're at scratch, if you haven't really made anything or lost anything, you trade as usual. You reduce your leverage or you don't trade at all. Really, the choice is yours. I recommend if you're neutral, maybe you go in and you take one trade. As usual, if it goes well, maybe you take another trade. But I would probably just be looking to get on to the next week if I was flat going into Friday, unless I had my bills to pay, rent to pay. If you had to pay, make your car payment or something, then I probably would just trade as usual. It's all about momentum. Friday, we preserve momentum. Monday, we get momentum going. Tuesday, Wednesday, Thursday, we attack our P&L. We go after our goals in the market, and that will set us up for long-term success. It's all about momentum. Generate momentum early in the week, and then we go ahead and come right back to it late in the week. Let's see. I just got an alert. What was my alert here? What the hell's going on here? Yeah, here we go. This was the Fibonacci trade that we lined up. I got very small leverage on, but this trade right here, you can see you've sort of already got your bounce. And that's exactly what we were looking at. So let's let this thing bleed just a little bit longer. We'll go down to a 1-minute time frame. We should pretty much already be out of this, though. Realistically, there was your election, and then you got really a nice bounce, and now we're just sort of fiddling around 38%. You'll notice we have extremely low leverage. Where would I put my stop loss right now if I was scalping this? I mean, you can see it's expensive. I can't hold a 5-minute position against the pressure. Where should I have already gotten out? Should I wait? I like the 1-minute chart. It gives me a pretty good idea of where I need to get in and out. I let this thing bleed against me for about a minute. So this is what we're going to do. We're going to put our stop loss beneath that 1-minute chart. That's a $40 trade, something like that. Let's go ahead and set this up for a 1-to-1, something like that. We got a pretty good bounce right there. It wasn't a bad trade. We took a little bit more of a draw than I would have liked, but we went right up there and we got our points. All right, we didn't get filled right there. That's because the bid-ask spread in gold is significant. That's why sometimes scalping a spot gold market is extremely difficult. It can be problematic. But look, we should have got filled right there. No question about it. Now what do we do? Well, it's hard. It's hard because you're dealing with such a big spread. That's why I recommend if you're going to tick scalp, you probably need something with a really tight spread. Something like a futures contract. Gold futures is typically what I'm scalping, tick scalping. But this was a pretty good trade. Did we get paid off yet? You'll notice we haven't been filled. This is where your psychology comes into play. What do you do when your price is hit, your target is hit, and you don't get filled? Well, we let it bleed and we got paid. So trade management in that case. I didn't really have a finite stop loss going into the trade, number one, because I wasn't looking at it. Probably would have been, at worst, we would have stopped ourselves out under here. But look at that. That was a $5 risk on a short time frame. You've got to trade small leverage if you're doing this, especially in markets this volatile with gold and silver. But this big sell-off, what do we have right here? I mean, I should write a book on hammers. Look at that. 1 minute hammer off of your key level. Bam. Hammers. That's it. We're trading hammers from now on. That's all there is to it. That's all there is to it. We're looking for hammers. Damn it. Hammers. All right, let's see. Emerson. Let me see. Emmy. Good to see Emmy. Welcome. My name is Emerson from Uganda. Always welcome. If you have any questions, be sure to ask. Like, subscribe, follow the channel, or you can also just go ahead and join me over at howtotrade.com. Open a free account. Ask me any question you like, and I will get back to you. I've got a mailbox full of messages, so I'll be sure to get back to you guys relatively soon. Let me see. Kareem. Okay, we'll take one more question, and then we're going to go ahead and roll on out. Kareem, if you had to choose fundamentals versus technicals, what would you rely on more and why? I'm a hybrid trader by my discipline, by nature. I know my fundamentals. I know what drives the markets, the key events that are going to bring the volatility. I know what those are. And I fall back on my technicals to trade the action. So fundamentally speaking, I don't really have the money to be a true fundamental trader. I really don't. I mean, if you're going to be a fundamental trader, you've got to have staying power. You have to be able to take positions for several days or weeks at a time to get in on those big moves, and you have to be able to hold those positions through market closures. That is inherently difficult. That takes a lot of money. No two ways about it. So I'm trading mostly technicals, but my fundamentals tell me when the market is going to react. Today, we were locked and loaded to trade NFP. Why? Because fundamentally, we knew that was going to bring volatility, and we had a bunch of different ways to trade the volatility. So I used both. If I had to choose, I would choose fundamentals just because, if I was a fundamental trader, I'd have a lot more money. I'd be sitting in here with $1 million trading account, and I'd be, just cleaning up every day. But, as a retail trader, I'm a lot like a lot of you, where you have X amount of money to trade. More than likely, my accounts are a little bit larger than a lot of yours, but it doesn't matter. At the end of the day, if you can make pennies, you can make dollars. Everybody gets married to this idea that I have to have a big trading account and I have to trade a lot of money. It's just not true. Start small, establish consistency, level up over time, and you'll find that in a very short period, you'll be trading big positions. So to answer your question, I would rather be a fundamental trader, more of an investor. Those guys are cool. They're always on the phone or on a yacht somewhere calling their orders in. We're working hard. We're lunch pail and a hard hat. That's what we're doing here. So definitely. Let me see. When you place alerts, do you automatically enter the trade or do you wait for confirmation? It depends on the trade, Kareem. A lot of times my levels, I'll go in naked, what I call naked, and that's without confirmation. But this is no joke. When we talked about hammers, take a look at this 5-minute trade. If we waited for confirmation on a 1 minute, boom, right there. There was your hammer. There was your bump. What do you got right there again? You got another hammer. Boom. Hammers are pretty good confirmation. When I see hammers line up in the direction my trade's going, it makes me smile. All right, good stuff. Thanks for the stream. I'm going to go ahead and sign off Funny Math. I've been on for long enough this morning. It was early. Next week's going to be a big week. Next week's always the biggest week. You're going to want to go ahead and join us Wednesday, NFP Live. That's going to be a big one. CPI Live on Friday. So we're going to have live events all week long. I'll probably be doing another webinar as well. Maybe we'll do one on the 9 EMA. It depends on when exactly the back office team, we're going to get that code out that's available for download. So one more quick reminder, do check out our 9 EMA strategy. I've already dropped that link in the live chat here on YouTube. I'm going to go ahead and drop it there again, and I'm going to go ahead and drop it here in the How to Trade community as well. You guys are all welcome to sign up and get the goodies. There's a PDF, and there will be some code as well relatively soon. So if you want to check out that strategy, go ahead and do so. As far as switch markets, if you need a broker and you need a place to execute and get market access, thousands of markets, I recommend if you're going to be trading, you probably want to be upgrading to that MT5. More than likely, that's going to be the ticket. I think that's going to be pretty good. One last thing I'm going to show you here with this. This was the 5-minute chart. You remember we placed this trade. I took this trade on the 1 minute. I told you it was problematic. It was really, really tight. I don't advise 1 minute charts for Forex pairs. But this right here, you've got an opportunity potentially on a 5 minute, maybe a little bit later in the U.S. session, that London-U.S. overlap. You might be able to get a 5 minute trade that may be pretty good. This 1 minute trade, more than likely, you're going to run into a little bit of an issue there. And you'll notice that we were in overbought territory. We just ran out of our room. It didn't satisfy our offset. So something to think about there. All right, everybody, I want you to have a fantastic trading session. Remember, preserve that capital. It is a Friday. I don't want anybody giving back all of their profits that they made this week and going into the weekend sad. Go home, watch the Super Bowl, be happy. Come back Monday. There's going to be more markets, and these things are incredibly, incredibly opportune right now. All right, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.